Meanwhile, footwear shares have turned higher today after yesterday's big drop. The president posting on Truth Social that Vietnam is willing to cut its tariffs to zero if a deal can be reached. Nike makes half its footwear in Vietnam, while On Holding makes 90% of it. For more on what this could mean for footwear, let's bring in FDRA CEO Matt Priest. And Matt, what are you hearing? Welcome.
Thanks, Kelly. We're hearing a lot of concern. We're obviously encouraged by the call between the president and the Vietnamese head of state there, and we're encouraged by that conversation. But at the end of the day, our members are trying to figure out how to cost goods in a really struggling environment. 87% of our executives we surveyed just last week see that economic headwinds are right in front of us, and that number is probably going to be 100% now that we had the announcement on Wednesday. So for us, all eyes are how we cost goods, how do we, how much of this goes to the consumer, and how can we mitigate some of this impact? There's actually been some research on how much,
sneakers cost. And people are just kind of applying this price tag to existing models and doing the math. But Nike and some of these companies, they have profit margins. They can absorb this hit in those margins if they choose to and not pass it along to the consumer. So I'll be very curious about that.
I think all companies are kind of different as they come up with their pricing and cost margins, right? But the fact of the matter is these tariffs, Kelly, that were announced in the Rose Garden are on top of the rates that are already applied. And as we've talked about before on your program, we have very high duties across the board. All of our footwear companies pay this. So a pair of sneakers out of Vietnam that has a 20% duty on it right now, it will have 46% next week. That's 66%. Some of our goods out of China are going to be north of 100%. And so when you get to those types of duty levels, that takes money out of business, American business. That hurts American jobs, and that drives up prices for American consumers. None of those options are good, and so I think that's why there's a lot of concern amongst our members in the industry at large.
Are people talking about reshoring? Is that an option?
We've been talking about it for a long time. We actually represent the vast majority of domestic footwear producers here. The dirty little secret about the announcement on Wednesday is the fact that the administration is also taxing and putting tariffs on all the inputs and materials and machinery that's needed to produce here in the U.S. So that's not going to be a viable option either, because those costs are going to go up. And that's just not a problem with footwear. We've seen this in components with automobiles, RVs, and other things that are manufactured here. And so that's not going to be an opportunity to serve the industry or the American consumer as much as we need to.
We first spoke with you about a month ago when your data, your just weekly shopping data, showed that there had been this drop-off in buying and some hesitation among the consumer. I don't know if you can kind of bring us up to speed as to what's been happening now. Are they trying to buy shoes or footwear now, maybe front load this a little bit, or just wait and see?
I wish that were the case, and I'm glad you asked me that. I was prepared because I was hoping you would ask me that, Kelly. Look, we have year to date, leading up to the inauguration, we were at north of 14% growth in retail for footwear. Since the inauguration, the 10 weeks since, we're down 11 points. And so we see a consumer that is nervous, that is holding back. And we keep getting told to play the long game, right? This is a long game opportunity. Our consumers have been playing the long game for years now from an inflation perspective. So they're worn out, and I think we're seeing that in the numbers.